Welcome to Show Your Priors. We're your co-hosts, Michael Nichols and Jason Thompson. A prior is the belief you bring before the argument starts. And each week we show you our priors, look at the evidence, and update as necessary. On tonight's show, Papa Elon has purchased an AI coding company for $60 billion. Or has he? We'll take a look. And later, Mike and I sit down with our very first guest, Scott Netwon. He's a leading strategy expert and a consultant. Scott is a wealth of knowledge, so make sure you stick around for that one. But first, let's take a look at the headlines. Google is to invest $10 billion in Anthropic today, and then another $30 billion to follow if Anthropic hits performance milestones. This will give Google a significant stake in Anthropic, based on a $380 billion valuation. Mike, is this just more of the same circular financing we've been seeing in the tech and AI space?
That's one way that you could look at it, because I know that Anthropic and Google have partnered, and there's a lot of pressure on Anthropic to find more compute. So this could be one way to do that. But I think it's actually a very interesting strategic move by Google, because many people look at that and say, well, why are you investing in your competitor? Because Claude is a competitor, a direct competitor to Gemini. Well, one of the reasons you do that strategically, it's called embedding optionality. Actually, the investment itself is embedding optionality. I buy a stake right now for 10 billion, and then I have the right, if you meet metrics, to invest another 30 billion and increase my stake. The reason you may want to do that, and it's a similar logic with Microsoft and OpenAI, is you have the option in the future to maybe escalate to a purchase, to buy what is a competitor and take it off the market. So that's called an optionality. I have the option to do it, but not the obligation to do it. It's a very interesting strategic move, because you would think, right, and I'm going to emphasize this again, that they're actually competing, but you hinted at the fact that actually Anthropic needs Google's access to customers. It's using its cloud at the same time that maybe Gemini and Claude are supposedly competing. And one of the things I want to harken back to is, we mentioned this on a previous episode, it's not actually clear that Gemini and Claude, Opus, or Sonnet are directly competing exactly for the same segments, because I think Google has focused more on image and creativity and maybe more of a B2C crowd. And it's quite clear that Anthropic's going into B2B. And if you remember that, Google may also want to get into B2B more than it currently is. And partnering with Anthropic, with Microsoft on the other side, makes a hell of a lot of sense. So out of that, what looks like on the surface a confusing investment makes a lot of sense if you start to dig down into the causes behind it, potential causes.
And I know Google has been coming after Microsoft's UCC, which is, Teams, voice, that kind of thing, that business for a while now. And so this doesn't surprise me at all, leveraging Anthropic, who's big in enterprise already, to get their foot more in that door. I wanted to call out a couple stats here. Microsoft owns approximately 27% of OpenAI. Amazon owns 15 to 19% of Anthropic. Meta owns 49% of Scale AI. And just on a whim, I looked up how much GCC countries, that's Gulf Coast countries, have invested in American AI and tech in the past year. I don't know. I just thought it was interesting that GCC has invested over $131 billion in
But
US.
Why? We're going to come to, why would they do that? Lots of space to put stuff.
Lots of space.
And there's lots of data centers, etc. A lot of oil money to spread around.
Lots of hype. Yeah.
A lot of hype. Yeah.
Interesting. I thought that was just an interesting stat. All right, let's move on here to the next one. I want you guys to listen to a story real quick, very quick. Imagine that you receive an email from a reporter named Michael Chen. He's seeking comment on a news story. It's going to be published on his news site called The Wire by Atticus. Only after some research do you find that Michael Chen is actually an AI agent, and the entire news site he works for, or it works for, is written by AI and edited by AI. And it's not a sci-fi novel, it's reality. Michael Nichols, what does this mean for the future of journalism?
I don't know. Let me play a contrarian position. I'll let you respond. What's the problem with it? So let's imagine you're a newsroom right now, and lots of the newsrooms, the business model is completely broken. Look at Washington Post. Look at many of the others. We could keep citing them, right? The newsrooms are really struggling.
Yeah.
Even when Bezos, this magician, takes over it, they're struggling like hell. CBS is struggling. They're all struggling, with the exception probably of New York Times. At this point, New York Times for me is a gaming app, right? So
Yeah.
that's a context you got to think about out there. You were hinting at a different direction, but I wanted to put that context out there. Maybe AI could be used as a way to cut the cost in the newsroom. And one of the clever things I think they did with this Michael Chen, where I don't really have much of a problem, using an AI agent to go out and collect quotes, that's actually quite smart, right? And well, provided people answer it. Now, is it ethical? Do you declare that Michael
Mm.
Chen is an AI agent? That's another question you might want to think about. And then when it comes to writing, there's this Puritan atmosphere around writing where most people are like, if it's not a human, you can't do it, right? That's just off limits, completely off limits if it's not a human. That's not journalism. I don't know. I see the argument there, but some of the deeper problems weren't really that for me, that maybe it's just an AI generating text. A lot of actual journalists are getting caught using AI as well to generate articles. The deeper thing is who's paying for this thing, right? Because it looked like in the end, it's like a shell company to promote pro AI and become an attack dog against people who are raising AI skeptics. Let's just say it that way.
You hit a lot of good notes there. My take on it is that it's inevitable. Like we're gonna get there where this is kind of the new
Yeah.
norm for our day to day news. I don't think they're gonna replace the Katie Courics of the world, but our day to day news cycle, I absolutely do think it's gonna happen. Now, my issue with this is it's not transparent. So there's no clear intent of journalistic integrity on the site. If it is written by AI, it wouldn't be nice to have a disclosure, in my opinion. And then these are the things that we do to maintain a journalistic level of integrity. There's this term. There's a couple terms. There's something called pink slime news, and then something called news mirage that this kind of falls into with this particular site that we're talking about, the Acutus, the Wire by Acutus. It seems to be very targeted at certain agendas and political philosophies, and pushing the agenda that it wants to push. And that's something that's, and it's passed off as real news. And it might be real news, but it's definitely slanted, right? And that's
But
something
hey,
called pink
how
slime.
many NGOs and PACs are out there
Yeah.
doing the same thing, packaging it up as fact finders or misinformation finders, but they're actually
Yeah.
pushing a line. I think an interesting graphic to bring up would be, and this will be a race maybe to the bottom. Who can lose trust in journalism the fastest? Actual journalists? Because if you look at trust in media
Yeah.
over the last 30 years, which I believe correlates with the explosion of social media in alternative news, alternative fact finding, fact interpretation, etc., or having your own truth, your own perspective, my truth, right? Which will get to the bottom faster? Would it be Acutus or the traditional industry who's kind of, smeared its own self?
Be a close race. My bet is those AI robots that ran marathons in China.
Oh yeah, yeah.
All
Well, they
right.
kind of they stumbled right at the starting line, right? And
Yeah,
then
the one who won
shredded
had to be picked
themselves.
up, but it's whatever.
Yeah. Well,
All
that's
right.
kind of what the news has kind of done that. It's like a self-own, right? A big self goal, right? Own goal.
I think they're going to make it, unfortunately. All right. So DeepSeek, the Chinese open source AI model, has released two new flagship versions this week, V4 Flash and V4 Pro. DeepSeek itself states that these models put DeepSeek 3 to 6 months behind US frontier models. Mike, that's a bold statement for an open source model that you can download and self host.
Yeah, and remember we talk about the massive valuations around Anthropic was 380, projecting forward OpenAI around 800 plus, right? Somewhere in that range. I don't know the specific number, but I would be worried if I'm them. And the main reason is you're going everywhere to get more and more compute. You need more and more power to develop these models. And there's a hint, at least I think from the White House this week and previously, that certain foreign powers are stealing the models, right? Or the technology or the IP behind it. Now, we don't know if that's true. I also said this on a previous episode. You can just put a pile of cash in front of workers at a company and your IP will walk right out the door. It happens every day
Yeah.
in every corporate around the world. There's corporate espionage the world over. I knew a guy in a university, I won't say his name, that was his job. It was called intelligence, right? Corporate intelligence, business intelligence. The guy went around, he had this really thick Alabama accent, and he told me the easiest way to get information from people is, besides like the honeypot stuff and compromising people, was just to get them to start talking. And the way he did it was to disarm them with this accent. And so they thought he was dumb because he sounds Southern. And
Hmm.
then he would just ingratiate himself like, oh, Jason, you're an expert at Anthropic. That's a really prestigious institution. Everyone knows you as an expert. Tell me about your work. It sounds glamorous. And then step by step, people love to complain. And then when they start complaining, you start to understand the real world they're working in. And then that's how he would elicit information from people. So it's stealing is the implied term out there, but it's not clear that that's what's going on. Maybe it is, maybe it's not. But if it is, tell me how the consumer is not benefiting from that, right? I mean, that's the other side. Because when I look on X, people are like, oh yeah, DeepSeek. Why would you ever pay for Claude, by the way? Now, if you can have basically the same, and your biggest competition, good enough. If this is good enough, self-hosted, to get the job done, why pay the $200 or more for compute every month? That's just for, the Claude Pro. You might have to pay even more if you're using the API. Why do that? And that's a big ass threat for those private models. And who knows why the White House is saying that? What's going on in the background? Do people hold positions in those companies? Are they being fed the information? I don't know.
Who knows on that front? What I do know, though, is that AI sovereignty and really tech sovereignty in general, there's been a big pushback around Huawei tech here in the States. I know from telecom that we had to remove tons of Huawei equipment because they were edge routers, switches, that type
Yeah.
of thing. And they've had to all be removed from U.S. infrastructure.
And in Europe too. I mean,
Yeah.
even, countries like the Netherlands, they basically kicked them out when they found similar
Yeah.
things, right?
Yeah. So sovereignty in this space is very important right now. And so I think it's really interesting that DeepSeek is now paired with Huawei and also using chips from Cambricon. I'm not familiar with that company, but they're a Chinese company. What's interesting to me, though, is that they're 3 to 6 months behind our flagship models, our frontier models. OpenAI and Anthropic still outpace it on long context accuracy tests, which is one of the basic reasoning tests that we use for AI. However, a very telling stat is that V4 Pro compute costs less than 15% of what
Yes.
OpenAI and Anthropic compute costs. And then V4 Flash is like 1% of the cost of what those
Yeah.
costs. Crazy.
And this is one of these unintended consequences of geopolitics, perhaps. So when you're putting up tariffs, etc., protectionism to prevent chips from going to China, they're having to depend on local production
Yep.
and finding other ways to reach efficiency. And actually, when you look at China's economy, they're very damn good at that in general,
Yeah.
right? Making the most out of a little and becoming super efficient, super productive, very fast at scale. And that could be one of the unintended consequences because what was cited as the reason for the 6 month lead of the US was simply compute and chips. And I think the release itself was kind of a preview while they gather the compute power to finish it off.
Sure.
I could be wrong. You can check that.
We'll check. Siemens has introduced a successful trial of humanoid robot O1 Alpha. Humanoid's the company. It worked an 8-hour shift, moving 60 containers per hour with a 90% success rate. O1 Alpha was trained on NVIDIA's physical AI stack. Mike, are we cooked? Do you think warehouse jobs are about to be stolen by robots?
I grew up in the European industrial context in my career. The context behind that is Siemens headquarters in a place called Erlangen in Germany. And Germany is a very, very expensive place to do business. It's highly regulated. The labor laws are very, very strict. The people on the line working in those factories, they're typically going to be represented by a union or a trade union, whatever, worker union, whatever you want to call it. And it's very difficult to lower your cost as a German manufacturer exactly at the time when the Chinese are manufacturing at scale and undercutting you on price everywhere in the world. Maybe not on the very high tech that Siemens in, but they're coming, right? They're coming fast. So the context of why would Siemens do this is, well, when you have so much expensive labor, if you could replace it with capital investments into humanoids, then a few things become easier. It's difficult to get rid of those workers, but maybe some of the safety in the factory, some of the regulatory compliance around that goes down. And essentially, this is just piece picking. The question is 90% good enough? I don't know. But will they get better? What is the standard that they have to reach? I don't know. But some of that context is European manufacturers are getting battered left and right by energy prices, regulation, the standards around AI. So they're kind of like handcuffed in a regulatory environment that causes their costs to be really high. So you can understand very well why they would be interested in humanoid. Yeah, there's a trade-off. What happens to those workers if they're displaced by these humanoids? Is the idea to augment them on the line, make it safer for them, put them in different positions that are maybe better for workers, not standing all day or bleeding eyes from picking and auditing. And so I don't know. It's a interesting question, but I think whenever you see something like that, you got to look at the entire context of what European companies are up against. It is not an easy environment. What's really, I think, refreshing is that often European companies can be slow to innovation, but this is an example of them taking some risk, right? That this is going to get the news, and I guarantee you some politicians will make some comments on that over there.
Yeah, you're absolutely right. As far as what I looked at with people or companies who have pilot programs going right now with robotics, BMW has a pilot program with Figure right now. And
same context.
Mercedes is using the Apollo robots from Apptronic in a pilot program. A couple of other interesting facts tidbits I gathered from this one was for every $100 spent on robotics, 80 of that goes to safety and infrastructure to support the robot and its environment, and only 20 of it's actually on the robot itself. So it's a very high cost proposition right now. The cost is coming down, however. So we'll hit that point eventually where it's worth it. But then technology research advisory firm Gartner states that by 2028, fewer than 100 POC pilot programs will advance beyond experimentation phases. Speculation again, but a pretty credible source in that arena. So I don't know. I think it's coming. I think you're 100% right. We will get there.
It's really no different than the kiosks in McDonald's in the end.
Yeah. Oh, absolutely.
You could have the live worker where you have all the regulations around that and the increasing cost, the increasing minimum wages, or you can capitalize it.
Yeah. And when you remove...
The question is, what's the longevity of these robots? Is it as long as a kiosk? I don't know. I mean, that's the question.
Yeah, they're a little bit more complex, so you never know there. But they'll probably have a lot more maintenance costs, that kind of thing. But an interesting tidbit about the kiosks is when you remove the human... fat people like me are liable to buy more McDonald's. So
yeah,
I'll order 2 double quarter if I don't.
Because there's no shame.
Yeah, there's no judgment.
There's no shame.
Just interesting.
And you can hide. You can hide a little bit until you put the bag up there and then go get it like slyly. Yeah.
You reach up to grab the bag when it's ready. Okay. All right. Multiple studies from MIT and Penn have found that AI chatbots could be eroding cognitive abilities in humans who use the AI. Study participants become lazy and experience cognitive surrender, where they prefer to let the AI answer questions instead of actually thinking about it themselves. Okay, so now, not the robots, just AI chatbots in general are going to cook our society, meaning we're done for, right?
Yeah, but they're not doing it. It's the humans actually have to participate in this game. If you're experiencing cognitive decline, it's because you're using AI. Nobody's forcing you to do that. And I'd be interested in having a much broader study because what you probably find is there will be segments where this is truer, right? Where it's more severe. And then there'll be segments where they're using it as a research tool and as an like a sparring partner is the way you would say that. That's kind of how I use it. And then there are others who will never use it, right? I mean, there you can imagine a spectrum of people who will use it too much and then all the way up to use it not at all. What it got me thinking about was schooling a little bit, like academia, because one of the lines in the article there describing it was that kids are complaining while using it a lot that they're getting addicted to it. And that was kind of the behavior I think they witnessed in the study itself is that it draws you into the point where you progressively outsource more and more to it, where you stop reasoning on your own. Now, you know what's interesting about this is the solution I see online a lot is force people to write, force people to read. That's how you overcome this, right? That's probably true. I roll this back to Homer. You know who Homer was?
Yeah, Odyssey.
Odyssey, and the other one,
Iliad.
the Iliad, right? Do you know how those stories were transmitted from generation to generation?
Verbal.
Verbally. They memorized it. They would have believed, this is what's funny. This is why I always like to have this perspective. They would have believed that writing and reading debilitates your memory. It makes it impossible to memorize the chants. Like they had different chants and tonations that would have to come along with the performance of the Iliad and the Odyssey. And that's all lost, the performance, when you put it down in a book. Even Plato, I think, argues that reading and writing debilitate the mind because they were using like, maybe it's not Plato, you can look that up, but they're arguing that the way that you learn is by telling stories and engaging in debate and the Socratic method. So I just find that perspective interesting that the OG, like the best way to train your brain is don't read and write, and then now it's the best way to train your brain is to read and write. Well, with AI, maybe it's true that you're doing neither of those. You're neither memorizing nor writing, right? Nor reading, right?
Yeah.
It's not even clear they're reading the output. That was what was funny. They can't even recall what was written because they didn't write it. They're just kind of completely outsourcing it.
Yeah.
I don't know how you overcome that.
I think you're right. It's going to depend. It's going to be a person-on-person basis. It's going to be dependent upon how you use it, how you consume it. I'm going to give you the W on this one because you went to Homer. That was a really good call because I wrote down GPS systems ruined our brains, calculators ruined our brains,
Totally.
spell checkers ruined our brains, right? So like we're
Hey, with the GPS one, I have intentionally my whole life since we've had that. It's super useful. I can't even recall how brutal it was to pull out a damn map.
Yeah.
And fathers like me don't want to use a map in the first place. So what I do when I move to a new place is use it when I go to a new place. If I travel there more than one time, I turn it off. And it's simply to train my brain to be more alert on the road and where we're going than just outsourcing it to that.
yeah.
There's a debate. I guess there would be a debate. Is it safer to have the GPS, the maps on or off? I don't know. Are you more alert with them on or off? And there's some debate that many crashes happen when you're in a routine, when you're going on the same route. So that would be the counter argument to what I'm saying is that when you got something it's just a routine, you become more careless somehow. You're so used to it, you just go autopilot, and doing something new using the map makes you aware that this is something new. I got to actually pay attention more. I don't know.
Interesting thought. I don't know. May have to look and see if anyone's done some studies on that. If not, we'll see if we can get you some funding, some grant money to go do that. That'd be great.
Yeah,
Okay. All right.
looking for my next opportunity. So
All right. So I've got a new idea for a segment here this week, and I'm calling it just because we love corporate buzzwords around here, and we just love them. I'm going to call this "Drinking from the Fire Hose." This is rapid fire headlines coming at you quick. So, all right, let's see how this goes. Tim Cook stepped down after 15 years as Apple CEO. His successor will be John Turnus, formerly Senior VP of Hardware Engineering.
yeah, one of my favorite commenters, intellectuals in the startup world is Steve Blank. And I remember Steve Blank wrote this article that the transition from Steve Jobs to Tim Cook would not go well. And the reason was, interestingly, he was juxtaposing their two characters. So Steve Jobs was known as the very highly creative person, entrepreneurial, creating new products, rethinking, reimagining how people interact with the screen, etc. And Tim Cook was the quintessential corporate executive that knows how to squeeze more and more cash out of the machine. But they needed each other. And one of the stories that people would tell was if you looked at their offices, you looked at Steve Jobs, like my room, there's a book on the floor, there's stuff everywhere. Like this creative mind has attention deficit disorder at scale, right? Like he's just all over the place. And that's, you know, that with creative people, you see that. And you go over to Tim Cook's and it's like immaculate. The question would be, was Steve Blank right? What happened to Apple afterwards? Many are still criticizing it, saying, what's the next big thing? The next big thing never came under Steve Cook in these people's minds, or Tim Cook in these people's minds, right? My question would be, what's the story that you tell in the transition from Cook to the next guy? It's a hardware person. Is that because it's becoming more of a compute game again? Is that why they're going that direction? That hardware is going to be, really essential for what's coming. I don't know, but it is a good question. Like, what is the next thing for Apple since they kind of sidestepped AI and are depending on the ecosystem that they built up and the channels that they built up, their specialization in hardware and brand and user experience? I don't know. I don't know, to be honest. Let's see.
Time will tell. Intel stock surges 25% after earnings beat analyst expectations.
So, a year ago, we thought they were cooked. Now, because of CPU and data centers, the explosion of data centers, you get 1 billion incremental growth in Q1, right? So, not looking like a corpse to me right now, but who knows? Who knows what's going to come?
That's 75% of my sales philosophy is right time, right place. The other 25 is take care of your customer. Meta to cut 10% of its workforce to offset the other investments we're making, according to their press release.
Yeah, I think quick take on this is just trading headcount for compute.
Yeah, pretty
I
much.
think they put in 100 billion, 130 billion in compute, right? So you got to fund it somehow.
Yeah. And tying into that, Microsoft offers voluntary buyouts for the first time in history, targeting 7% of its workforce with early retirement offers.
So I think this is where you would say Microsoft is clearly trying to think about its complete business model. What should it do with AI, the rise of AI, the rise of competition like Anthropic, perhaps Google, that partnership? If OpenAI goes to IPO, what are they going to do? Are they going to be able to sustain with just Copilot and Teams and Excel? I don't know. Open question.
Got to have some way to hit those EBITDA targets. OpenAI launches GPT 5.5, touting strong gains in agentic coding, computer use, knowledge work, and early scientific research.
I think one of the things to look here is I think they're looking for more efficiency gains, right, across the board because their compute is just expensive per query, right? So I think you're going to start seeing shareholders bearing down and the board of directors bearing down to make sure that they're becoming more efficient and more, getting close to cash positive because their competition is.
They also released, I think we have a couple of these, they also released Images 2.0, the first image model with thinking capabilities with improved detailed instruction following, placing and relating of objects, and rendering of dense text.
Not much to say there. I'd be interesting to see how we can use that in gaming, for example,
Yeah.
and building apps.
Marketing for the show. OpenAI's Dev AI tool, Codex, can now use all of the apps on your computer by seeing, clicking, and typing with its own cursor. All three updated models from OpenAI are available now. Codex is only available on Mac OS, I believe.
Yeah, I think this is competition with Claude because Claude works out of the terminal and can do really everything from there on your desktop. And that's probably that move is to compete more directly with them.
Interesting one here. Volkswagen to equip Chinese cars with AI agents by enabling highly intuitive, human-like interaction between vehicle and customer while ensuring robust personal data protection.
Well, I don't know how well that works in China, where the data is sovereign to to the country, right? I mean, the other thing I would say here is Volkswagen has basically lost the race there in China against BYD and the rest on the EV side, and they have a structural disadvantage. Those companies are vertically integrated. Volkswagen has to deal with that European regulatory environment, expensive labor, etc. So they're trying to move more and more stuff to China. So in China for China, basically, it's called local for local usually. And I don't know if having an AI agent in a car is enough to overcome that structural disadvantage that you have. And besides, it's not like the Chinese versions don't already have a supreme digital experience. That's where they come from.
Yeah. It's hard when a company calls out how robust their security is to not question why they have to say that. Okay.
Yeah.
Microsoft is to spend $18 billion on AI infrastructure in Australia, partnering with Canberra to benefit cybersecurity, workforce upskilling, and artificial intelligence development.
Yeah, I think probably hedging, right? That not every data center is in China and the US, so it's a little bit of this decoupling. Have another alternative in the Anglosphere,
Yeah.
and they have a lot of space there, like in the Gulf Coast. Right?
I think that's true. Anthropic and Amazon expand collaboration for up to 5 gigawatts of new compute in a deal that totals more than $75 billion, running alongside deals with Google and Broadcom.
Yeah, again, I think this is hedging a little bit, right? So you want to get your silicon maybe from Amazon, get more compute using their cloud, right? Get access to customers through the cloud, etc. So some customers use Amazon Cloud, some Google Cloud, so some Microsoft Azure. So you want to make sure that you're available on all those services to penetrate enterprise. And then just having another source, right? Besides NVIDIA. So you don't really want to be sole sourcing anyone, right? You want to have dual source, triple source as much as you can to hedge and keep your costs down. And you see that in another context, Strait of Hormuz, if your supply gets cut off, you better have alternatives.
Fair point. All right, let's move on to our main topic for the evening. SpaceX just announced a deal to acquire AI coding startup Cursor for $60 billion. But there's a catch. The decision on whether to actually follow through conveniently lands after SpaceX's IPO this summer. Musk may have just turned a $10 billion option into a $60 billion valuation story. And Wall Street's already pricing it in.
Well, yeah, we talked about that on a previous episode of rolling up XAI, SpaceX, right, to build more of an ecosystem. And Elon's great play is that this is all going to outer space. And it's somehow the narrative's forming around AI capabilities. So compute around XAI, right? And around, of course, using the supercomputer. I think that was a part of this story that Cursor would be able to use that because Cursor itself needs access to more compute, more and more compute to compete with the other coding agents out there. So this is just taking one of the big players off the market, potentially, because it's an option. And for people who are curious, the way that that works is essentially you're paying 10 billion for the right to potentially pay 60 billion total. Because that 10 billion is really a breakup fee if for some reason the partnership doesn't work out. But that's a hell of a breakup fee, right? And so again, we talked about optionality. This is a good example of it. Let's get them off the market in the time being, because I think they probably would have gone IPO either way. They go IPO, they're more expensive. So get them off the market now while they're raising 2 billion. And then you have the option if the partnership goes well, if the integration plan makes sense, cultures clash, business models clash, then you can break up. People see that as an expensive breakup, but it's much more expensive to do the full transaction and do the integration going all the way to IPO. But I think what you're seeing is the building blocks for a more coherent narrative around AI, the space story, data centers, compute, coding, like just creating a much broader ecosystem to compete.
I said this with space data centers. He's really good at increasing the value of a company. And I don't know that he's as good at increasing the underlying financials. And I think this, we talked about Allbirds last week, and I don't think this is as egregious as Allbirds by any stretch. But I do think it has some of those hallmarks of pumping the stock, because he gets to get the value of acquiring that company just because of the way that this is structured and the timing of it. He gets to claim the value without actually having to purchase the company. So he's acquiring a $60 billion asset because any asset's worth what someone's going to pay for it at a given time. In this case, $60 billion. We have proof now that that company's worth $60 billion. It's going to wrap under SpaceX. It's going to make the valuation of SpaceX potentially go up by 60 billion. However, there's not been a deal struck for it. So I think it's a genius move by him from a stock inflation standpoint, or potential IPO offering standpoint. I think it's a genius move there. But let's look at the flip side of this coin. So Cursor is a company who potentially could have been a $100 billion company. For them to accept this offer now, looking down the barrel of Claude Code or looking down the barrel of Codex from OpenAI, you have to kind of wonder, was there some writing on the wall for Cursor that made them accept this deal in the first place? So you got to wonder there, but a $60 billion or $10 billion payday is really hard to turn down. So who knows? And it does give them access to one of the biggest supercomputers out there at Colossus. I think it's called, is their Tennessee supercomputer. So I don't know. It's a really interesting deal. It's very structured favorably for Elon and SpaceX and their IPO offering. So I don't know. I always have a negative slant towards Elon, but he does do some pretty smart stuff.
Well, think about it from Cursor's perspective. You're raising 2 billion. Compare that to how much Anthropic and OpenAI are able to raise. So if you attach your name to the quintessential capital raiser on the planet, you're going to be able to actually compete. And they have apparently a good product. They've gone from a couple $100 million in revenue to 2 billion, I believe, annual recurring revenue in just like a year. The difference between that and the rest of those companies it's attaching itself to is like they actually have proof in the market right now. And then you're going to attach that proof to the whole ecosystem, the whole narrative, and you're going to have access to much more capital. That's the differentiation between that one and Allbirds. They actually have something.
Yeah.
Right? They're actually good at what they do, apparently. Now, will they win the long-term race? I don't know that. But, they say, I'll just play the devil's advocate, never doubt Elon, but especially in selling a narrative and raising capital. And Cursor could use that capital.
Yeah, agree. I agree. So there was talk that Microsoft actually passed on a deal with Cursor to acquire them, and they passed on it right before Elon made his offer. Maybe they saw something they didn't like, or maybe Microsoft just didn't have the right kind of capital that Cursor would.
Well, maybe they were using Copilot for advice. I don't know, right? Or maybe they're just so confident in Copilot's abilities. Every time I ask corporate people about Copilot, let's just say they are not exactly effusive with their praise. Let's just say it that way.
I always like to point out when people drag Copilot that it is powered by GPT-4o and sometimes GPT-5 models. Just Just
So are
throwing
there
that out there.
like, are there corporate affairs forming that we don't know about if they're using 4.0?
Maybe. I mean, corporate affairs. Yeah,
Yeah.
very well could be. But yeah, I
Yeah.
just like to point that out that OpenAI is still behind Copilot. So drag Copilot all you want, especially if you're a Chat GPT user. It doesn't make any sense. It's all the same thing underneath the hood. I think. I'm
Yeah,
sure.
yeah, yeah.
I'm sure
Exactly.
Copilot is geared more towards enterprise. So it's probably lost some capabilities that GPT has, and it's probably gained some others. As far as
Well,
like knowing, about your company's North Star and documents, that type of thing.
I've been doing lots of customer interviews to see how corporates are actually using AI.
Mm-hmm.
And Copilot's the name that comes up the most, like to their credit, but it's fascinating what they're using it for. They're using it for draft an email, right? To make a memo. So for these very like low value tasks for people, it makes them more productive. Like for you, yeah, okay, I'm not good at writing emails. This does a better job. They're not using it for, you know, designing agentic workflows, for example, where a lot of people think that's where actually all the value is. So it seems there's a lag in the adoption of AI to its greatest potential in corporate.
Yeah.
And maybe the problem is, to be fair to Copilot, that's not Copilot's problem. That's just that corporates don't know where to point the damn thing, right? So that would be the other side of the argument is that the people using Copilot, you know how we used to say in baseball, well, it's not the bat, it's the batter, right? So it's not the co-pilot, it's the pilot. That's the problem. So that could be the other side of the story is that people just simply don't know what to do with Copilot. Maybe it actually can do a lot more than what corporates are getting out of it. And it gets a bad name just because of that user error.
Yeah. So I know from my corporate experience that Copilot comes with Copilot Studio or Visual. It comes with an agentic programming side of it,
Yeah.
and in my case, it was locked down. Like you could get in there and do a couple things. Like I could make it. If I got an
Yeah.
email from a certain customer, I could have my agent ping me in Teams that, hey, Susan just emails you. You better look at it and respond. That was useful. But it's very basic functionality, something you could have done with,
On your phone.
flags and filters before, like, right. You
Yeah.
didn't need an AI agent to do it, but they had all that locked down for us. So like I couldn't get in there, somebody who's actually capable, I couldn't get in there and make it use tools to my benefit. Right. There's only certain people in the corporation, the company who could do it. And, it all goes back to liability and putting things out there that isn't tested and approved and all this kind of stuff that it's locked down. Now, I have heard of things where certain departments will have just a full day where they do nothing other than come up with ideas for AI to replace their jobs, essentially. So that sounds kind of cool, but then, those have to be reviewed and adopted. This is just why corporate is slow, is because everything has to be reviewed and adopted, but there's good reason for it. It's all down to liability. Who's going to pay for it if something screws up?
Not all. I mean, it's not always good. There are good reasons.
Yeah.
But I guarantee you probably have more AI safety boards than AI adoption right now.
Yeah.
More than the AI projects. And yeah, on the one hand, it's good to check the safety, the data privacy, etc. On the other hand, those things turn into political games. Like who gets what projects? Does that project threaten my department? People are keenly aware that AI can displace their headcount underneath them.
Yeah.
Is that what you want if you're in a corporate? Not necessarily because that's your power base. So there's a lot of, you know, political games, shell games going on in those AI safety boards. And if you're trying to sell into enterprise, that just makes the sales cycle way longer than it otherwise would have to be. And that's just the first pass. AI safety board, then you're going to get an IT review, then you're going to get a legal review. And that's even before you get to the SLA part, like what you're actually trying to sell.
Yeah.
Like that's just the, reviewing, doing due diligence on the technology and the safety. So that's the world that people live in. And so when you're out there bashing corporate people for not being innovative with AI, that's their operating environment. It's not that they're not wanting to do stuff with it often, it's that they're just not even allowed to.
Yeah. Yeah. It's going to come down to there's going to be somebody with a sales specific AI. Maybe it's Salesforce, but there's going to be somebody with a sales specific AI or a customer success centric AI, and they're going to buy it from a third party because that third party is going to assume liability and et cetera, et cetera. They've had certifications or whatever. Yeah. That's probably the way it's going to end up working versus in-house brewing at large scale. That's at least my take on it anyways. You know, we actually talked about this exact topic, AI adoption, with Scott Netwon, who is the first ever interview to be conducted on Show Your Priors. Scott is a managing partner at Thinking Dimensions, a global strategic consulting firm where he spent over 20 years advising boards, CEOs, and private equity on strategy and growth. Outside of client work, he mentors founders at Techstars, leads the MBA consulting program at CIMBA, and holds board seats at Strategy Tools, a strategy SaaS company, and Sirius, an AI-driven sustainability platform for metals and mining industry. Let us know your thoughts in the comments below on the interview. We hope to do more of these in the future. I'm going to leave Scott's LinkedIn in the description, so reach out and show him some love. Scott, you are an extremely busy guy, it sounds like. So we really appreciate you being with us here today.
Super. Thanks for the invite. I'm happy to be here.
Absolutely. Let's just kind of hop right in. And can you tell us what's the right way to do modern strategy given the rise of AI?
That's a good question. And actually, technology is helping because what I've been finding is that you can use AI tools like LLMs to be a blind spot checker more than anything else. So one of the biggest challenges I see in strategy is when boards, investors, founders, CEOs and their management teams get really excited about a particular direction. They start heading in that direction, investing a lot of money and allocating resources, and the assumptions behind that are wrong. And so then what happens, it's a very costly mistake. You can lose market share, you can lose CapEx, a lot of things can go wrong. And at the same time, it doesn't have to be that way. And so for years and years, we've had experts that come in the room and say, let's check on your strategy and let's look at where the holes could be. But now what AI has done is give that ability to everyone and at scale. So what used to take weeks or even months, now you can do in a couple of hours, and you have access to a much wider data set that is challenging your ideas and asking you those uncomfortable questions that, when answered, might show you how to build a better strategy and create new opportunities. So that's what I see the biggest change in technology has been. And then, of course, the access to data, which went from taking months or in some cases years to now it's seconds, and the costs have dropped 99%. So there are so many ways we could look at how technology is building this. It's a matter of getting people comfortable with using it and using it appropriately, because not all technology uses are good either. So that's what I'm seeing right now in the market.
And then, so something I've noticed is one of the biggest problems is just with the word strategy itself, right? It comes from a military context, strategos, which just basically means general. And it's thinking about physical battlefields, right? How to approach the enemy, attack the enemy's weaknesses, try to impose asymmetric costs on them. But the best strategy of all was just avoiding the enemy. The best thing you could do is just never engage if you could. And if you do engage, you must have an overwhelming advantage, right? And so one of the things I always see is I think in a lot of executives' heads, strategy is simply something like this. We're going to grow 10%. The market's growing at 3, but we're going to grow at 10. And our current EBIT's maybe 7.5%. We're going to increase that to 12. And that's it. And we're going to do that within 5 years. And maybe we name some strategic projects. We're going to go into this vertical. We're going to do digital transformation was the previous buzzword. Now we're going to deploy AI to become more productive, efficient. So what's wrong with that? Because that's how I hear it a lot of times coming out in earnings calls or when CEOs or senior level, they're talking about their strategy.
So, I mean, it's a huge topic. I'm thinking this would be a great book, actually. Okay, let's start with what's wrong with it. One, the world doesn't move in 5-year planning cycles. And so just because we've laid out a plan and it's worked with our calendar, that's not the way the world is unfolding. And as a result of that, if your strategy is static, then it's not going to be right. You're never going to have a forecast that's perfect, but if you're updating it consistently and feeding new information into your decision making, then you have a better chance, a better probabilities of success. The second problem that I heard in there, and it's one that I see a lot, Michael, is this idea of growing a CAGR, or, we have this market and we're going to take 20% of the market,
The share, yeah.
without understanding what are the drivers of that market and how do our products and services fit or not fit in that market. And then that comes back to what you talked about also with competitive advantage. And so is there really a competitive advantage, and is it relevant in that market? And that's a question. And the answer is usually no. So 3 things. 1, are we testing our assumptions? 2, are we testing our assumptions against data that's valid? And then the third one is, do we really understand the implications of what it is we're deciding? And do we even have agreement between our managers and our board as to what that is? So that's what I see that's wrong, that continually causes firms to get tripped up and stuck, is they're just not in touch with reality and the fast changing pace of the world around us.
That's right. And you said a key word, assumptions. What should the assumptions be in a strategy? What's the set of assumptions that you need to make and then test in the market? Because it's not just wish casting certain P&L numbers, right? What is it? What does it need to entail?
Right, and that's something that my colleagues and I have talked about a lot, which is this inside-out thinking. So looking first at the external conditions, what's really going on with supply, demand, changes of technology, and then looking internally, and instead of patting ourselves on the back and saying, oh, we're really good at this, saying, okay, now that we see how the outside world is unfolding, how well do our capabilities match with that, and where are the gaps? And then with those gaps, how are we going to fill them? And I think that's something that a lot of strategy processes miss, is they look at what we're good at and then say, okay, let's do that because we're really good at it, without saying, well, does the world need any more of that? And could the world be successful? And will the world unfold the way we expect it to? And what tells us yes or no, and especially what tells us no. So being our own biggest critics in challenging the data we're receiving and what we're thinking about the future, so that we don't go and build something that just nobody wants.
Yeah, and one of the cases to me that's fascinating, where you can really think deeply about what are capabilities, is the classic Kodak case,
Right.
and then contrasting it with what Fujifilm did. Because if you looked at it superficially, you'd say, well, look, they're both doing film cameras, but why did Fujifilm succeed and Kodak just tanked? And do you have any thoughts on that? I have my own theory, but I'm curious how you read that. Why one was able to succeed where the other failed?
Well, some of that I think comes down to internal culture, where Fuji had built a culture of looking for problems and then testing solutions against those. And so they were able to find that medical imaging market, which was both lucrative and had a moat built into it that was defensible. Whereas more what happened in Kodak is you had a lot of kind of warring silos. And because of that, you have these people that had chemicals they sold to develop film. They want to defend that because it's super high margin and it's good cash flow. So the CFO likes this. And then you have these people saying, well, actually, we don't need chemicals or film because we've created this sensor and we could license this sensor. And so there was never that ability to say, what should we really exploit for the future, and then move in that direction. And so Kodak missed that opportunity to pivot and disrupt their own market because, and this happens to so many companies, they had this really lucrative business with super high cash flows. Why would you break it? I mean, it's the same thing. The Yellow Pages is another great example of that, where at one point the Yellow Pages was the most valuable company in many countries around the world. And they all saw it coming. They knew that there was going to be this thing, and Google was coming out, and someone said, "Yeah, but I make 24 billion free cash flow a year. Like, I'm not going to break that just because these guys in San Francisco, built a web page." And then, of course, when the tsunami comes, it's too late, and then you have nothing left to do but see if you can cover some of your debt.
We might be the last generation that even remembers what the yellow pages were. I at least understand the reference still. And I think the Kodak one is very interesting because one, it's about perception and culture, you're correct, right? Like they perceive their business as razor and blade, right? Give away a cheap camera so that you can sell film and generate that aftermarket. It's just like the HP, right? Like you go to the store, you're super happy. Oh, I got a 35 euro, $35 printer. The cartridge though is $50, right? And that's in perpetuity. And I think for them, they got trapped in that business model. This is what I found an interesting article from Scott Anthony. They even developed the digital camera first. The problem was it cost $25,000. And that they could not imagine a world where you would sell something for $25K and then never sell the components afterwards. And then Fujifilm, and you hit on it perfectly, they perceive themselves as a chemical company. Right? Our basic capability is we are good at R&D on chemicals, and then we can redeploy. This is what you're talking about. We can redeploy our capabilities to markets where there's a match. And for some reason, Kodak could not do that. I don't know why that is. That could be internal politics too. I don't know what you think about that.
I think that the silos were too strong, and so that the owners of those silos just would not let go of those businesses. And the arguments came back somewhat logically. We've got this debt to cover, we have this cash flow. Why are we messing around with something? I mean, even in some of the big tech groups, I remember when cloud came out and they started talking about maybe we could sell our software on a SaaS model, a software as a service model. There was really strong pushback from the sales teams because they said, "No way, we sell licenses, man. And my job is to sell this license for $2,000 a year, and I can sell it to every enterprise around the world." And here's someone saying, "Well, actually, we could make more money selling it for $10 a month." And so you have this clash of cultures, and the question is, who's going to win? And is the board challenging management enough about where that market's going? Because I think if you have a strong board, then they're going to insist that, stop looking at your old business model, stop looking at how things are now. Let's consider how fast the future's moving, and then how do we become the one that's going to win in that future? Or if we can't win, let's carve out this business and sell it faster than others, because otherwise we're going to be trapped.
You know the scary thing about that story? They saw it coming. They had the technology first. They knew it was coming. And that business model and the power of governance and incentives was so strong, they couldn't overcome it. And the Yellow Pages example is a very good one. Steve Blank tells this really cool one, I think, that it's about the horse and buggy manufacturers. So the people who made the buggies, they could see the vehicles coming. They even made like the shape was similar. And he asked the question, how many of those original buggy manufacturers actually ended up transitioning to make automobiles, like the chassis, everything else?
Right.
And the answer was like one, and it was Studebaker, right? Right. It was the only successful example where you could even see the same shape, but you could not extract yourself from that business model. So they're just like trapped in that. And that's a sort of a warning sign for all leaders out there, is like, you're so trapped by your incentives of the annual P&L in your current business model. And then you have something like AI coming along, which for most people, AI is like selling tokens, right? Or project work in its current form. You're selling hardware. Here comes AI. What do you do? How do you think about that?
Right. Well, and that's the good question to ask is, how is this business model going to change? And when the disruptors come, they're going to start by picking off the easy, high margin products, right? So if I look at fintech, so who's been successful in fintech? More than anyone else, almost, you have Revolut. right? They're talking about going public at 200 billion sterling valuation next year. What did they start with? Forex for foreigners, right? So foreign exchange for foreigners. Why? Super high margin business. The bank didn't really care about it because they had a trapped audience. And then once you had these people and you were working with them, then you can start to offer them other products. And so the banks were really slow to recognize Revolut. I mean, it was only a few years ago where I still had senior decision makers in finance telling me that Revolut was a scam. And now it's more valuable than most of the major banks. And there are other examples around the world of in Brazil, we have another one that's done this. In Africa, there are a few examples of this. So you start by picking off those high margin services, and then over time, the income is left as a commodity, which is exactly what happened to the mobile phone companies as well. If you look at Vodafone, it was one of the most valuable companies in Europe, and now it's worth less than when it IPO'd. So, what happened on that journey, they got commoditized, and they were sticking with their core business model, even as all these people around them were becoming very wealthy, offering services that could have been offered by a platform like a Telecom Italia or a Vodafone or an Orange, etc. But they didn't move fast enough, and they didn't have the culture to experiment and say, okay, we're going to test 300 ideas, knowing that 290 of them will fail.
Yeah. A good example of this, because I spent most of my career in automotive. When Tesla first appeared,
Right.
I remember these German engineers saying they could never engineer a vehicle like we can. They're underestimating how difficult it is. And what ended up happening is they didn't need to.
Yeah.
It turns out you don't need nearly as much engineering, nearly as many components, all those ICE components, right, that you would need for an internal combustion engine. You just don't need it. And then they did something even more interesting, and the Chinese have maybe comment on this. They redefined the concept of what a vehicle is.
Right.
It's now called what? It's like software-defined vehicle.
Yep.
And then you have somebody like Xiaomi, where it's literally a mobile phone, right? Like
Right.
the vehicle has been reconceived to be like a device that you're just in it going A to B, B to C, but it's like an entertainment device that you're just rolling along with. And what's interesting, because you sit right in the heart of Europe, right?
Yeah.
How can those premium companies like Mercedes, I know you talked about Porsche a few times on LinkedIn, how can they deal with that? And the development cycles are completely different. Like one's 3 years,
Yeah.
the other is flash over the air, right? Like once you got
Right.
the machine out there.
Yeah, I was just reading because the Beijing Auto Show starts tomorrow, and there are 1,462 models being exhibited.
Right.
So in China right now, a new car is being released every 48 hours, a new model. So if you think about that, I've writing the numbers down and I'm looking at them and I'm saying, this can't be right. And I'm triple checking it. And I'm like, this is absolutely unbelievable. But what you have is a difference in organization. And so the European automotive industry was built on this. We have the OEMs, so the mother brands, and then they're going to work with tier ones. So the tier ones are the big suppliers like a Bosch or a Continental. And then there's the tier twos. I live around in northern Italy. There's hundreds of these tool makers and die makers, and they're really, really skilled companies, but they work only for a tier one or occasionally directly for an OEM. And then you have this organization, which is very efficient if you're building a product that only changes every 7 years. So the logic in Europe in automotive was we build a platform like the Golf, best-selling car in history, and every 7 years we'll roll out a new one. And this was great for everyone because a dealer could know when they have to change their inventory. An end user could say, when should I buy this model so that I don't get stuck with the old model? A leasing company could really predict the depreciation. It was very convenient. It worked well until someone came along and said, we don't need to work on this time scaler model. And by the way, we saw exactly the same thing happen in fashion, where the fashion companies were running 2 cycles a year. And then the Asians come along and said, we'll just drop a new collection every week.
Yeah.
So you can't do that. There's winter, fall, and summer, spring. And someone said, yeah, we don't care about seasons. You go on our online store and we'll have a new collection every week. And now it's gotten to the point where Shein, the Chinese-based, Shenzhen-based manufacturer, they're dropping 70,000 new styles a day. So, it's just, and that's where the merge of technology and business model and taking advantage of what can be done, shipping direct from the manufacturer to the end user, payment collection structures that allow multiple incentives. That you have all sorts of things that are being built together in this ecosystem, and that completely changes the model. And by the way, completely changes the barriers to entry. Because it used to be, if I was going to enter the fashion business, I need the best distributor, right? And the best distributor already works with Prada or Louis Vuitton or Diesel. And so I can't even get into that distributor, and they would never even talk to me. But now I say, actually, distributor is just slowing things down because they have to buy inventory and hold it. And I'm going to go directly to the mobile phone of the end user, and I will have them looking at this on their way home from school, and I'll ship them the purchase direct from the factory, and I won't even make it till they order it.
I can pay an influencer on TikTok or whatever to get straight to my customers. Yeah?
Exactly. So this is what we see in automotive, in fashion, and now increasingly in industrials as well. So this change is coming for everything, not just consumer-facing products.
You talked about it a little bit there, but what are your smart customers doing with the disruption that's coming from China with the supply chains and their overcapacity and, quite frankly, price undercutting, I assume? What are your kind of smart customers doing to adapt to that?
Yeah, well, a lot of our most successful clients, they've had facilities in China for some of them 25 years now. And they don't look at this, and they haven't looked at it for a long time as a low-cost production center. It's a learning center. And so they can learn, they can test on the China market, and then they can also beat with speed. So the one thing, and we're all seeing it right now, is that shipping goods around the world, there are a lot of vulnerabilities and a lot of areas or challenges to resilience and supply chains. And so what you can do is that if you have an R&D center in Shanghai and you have a production facility in Milan, you can learn from one and deploy in the other, and vice versa. And this worked very well also during COVID, by the way, but now it's just increasing in speed. So the smartest companies are looking at, where do we go globally to learn? But then importantly, how do we share that learning close to real time around the world? And also distribute decision-making close to the end market. So it's not necessarily that what works in Dusseldorf will work in Shanghai. That's not necessarily true. But if we know what are the criteria and we have an overall strategic goal, and then we say, okay, now how do we regionally develop this and give enough autonomy to those regional managers that they can meet their P&L targets while not just focusing on this is our long-term global plan, et cetera, but really working on what does this market need and how do we deliver it? And then how do we share that learning back with other markets so that flywheel becomes global. So we're learning from the US, we're learning from China, we're learning from Thailand, et cetera, et cetera, et cetera. And it's all coming back to a central decision-making system.
Over the past few years, we've seen companies pivot to an AI focus and even renaming themselves to include the letters AI in some cases in their branding. This is to drive attention to them, stock prices, press releases, that type of thing. Given that massive amount of hype that we're seeing, what are you actually seeing on the ground as far as corporate adoption? We know corporate is slow to adopt in most cases. Is that still true with AI, or is there something else going on?
Quick to the hype, slow to the adoption. At least that's what my impression is. What's yours?
Yeah, again, there is this, I think there's long tails. So there are a few companies that are really getting ahead with this, and they are able to move at a speed that is not incremental. And that's super impressive and disruptive. And then there's a lot of groups that are stuck in what I call pilot hell. So, I talk to digital transformation leaders. They're like, I'm running 32 pilots. I'm like, how long have you been doing that for? They're like, 24 months. Like, okay, so when does that move from pilot to production and scale? And one of the biggest challenges is, of course, creating that data culture. And a lot of people don't want to hear that because that's hard work. That's foundation building. That's getting everyone in the organization to understand. That's retooling your technology. And those can be really large costs that don't have any immediate benefits. I was talking to one CIO, and he's like, our biggest project in terms of expenditure right now is we've got these 49 SAP systems, and I need to make that into one. And of course, that's a huge amount of money. The managers don't see anything from it. In fact, they see the negative, because I'm telling them, you're not going to have the functionality in the future that you have right now. And so there's a lot of pushback saying, why would we spend all this money to get less? So building that plumbing is hard. Getting that data culture is very hard. And then moving from pilot to scale is the hardest of them all. And it is possible, and I see the leaders are doing it, but the hype that, you're just going to get one of these cloud service providers and all of a sudden decisions will get made, that's not how things work. And so that's where I see this distance growing between what has been promised and what can actually be delivered. Similar, by the way, to what we saw at the start of .com, which was, leading up to 99, there were all these predictions that 70% of retail stores would close and companies would put .com on the back of their name and the valuation would double. And we saw all those companies failed. But then coming out of that, we saw an Amazon, we saw a Salesforce, we saw these global leaders that were able to say, there is something to this .com. It's just a lot more work than putting an acronym on your brand.
Right. Long Island blockchain iced tea, right? That's
exactly. Yeah.
You mentioned the proliferation of pilots, and let me give you a cynical take on that. It's a very cynical take. I'm just warning you, and then you can respond. Maybe the metric's wrong. Maybe the incentive is to show that you're doing pilots, but there's not an actual conversion metric where you need to actually pilot, then create scalable, repeatable business model and convert that to cash. So maybe it's a little bit of pilot theater going on.
Yeah, that is a cynical take, and it is somewhat true. I do think that most organizations have the intention to move from pilot to scale, but they haven't put in place the infrastructure that's necessary for that to happen, or they haven't found the pilot that you could actually take and scale. So they find a pilot and it's cool and it works in a niche, but you say, okay, let's move that into production for a continent, and people say, well, it doesn't work that way, etc. So there are a bunch of factors going on here together, and it also comes back to, is a business really ready to be digital first? And are the managers willing to accept what that means? Because it often does mean a loss of control. And managers in many organizations are not wanting to lose control, and rightfully so, because if their incentives are built around control and their positions built around control, then then to lose that could be quite disruptive. So I think it starts with the board and saying, we're going to be a digital first organization, and that means we're going to have to take some strong decisions and make some strong investments, because this isn't going to happen with a pilot or a few little investments with a consulting company. We need to make a major investment in our own capabilities and own those that are proprietary.
Right. And the less cynical take is simply they don't know where to point AI towards, right? And they're just experimenting. And we also know that one of the biggest mistakes you can make with a pilot is to scale the wrong one.
Right.
Right. So that's one mistake you see with startups all the time. You and I were talking about that right before. So how do you educate executives? This will lead into something else you spend a lot of time on.
Okay.
What AI even is, because I think a lot of them just don't have a sense for what it does beyond this like deterministic tool, which it's not. It's stochastic, right? It's probabilistic. Right. But they kind of perceive it as, oh, this is a means for productivity, efficiency. But I think that's missing like the larger story of what you could possibly do with it. And so my steel man for them is, I just don't think they know what the possibilities are. And the first thing they deployed it to was bottom line efficiencies.
Right. Well, that's the thing, is those incremental improvements will not be competitive advantage. They might help you when margin compression comes, and margin compression is coming because all your competitors are doing the same thing. Then that will lead to margin pressures. But that won't be that next big business idea where you completely shift the discussion and say, we're not going to work this way anymore. That's not how we're going to sell, etc. And then that just changes everything. So what I find, I start with boards and educating board members on, what is AI? How can you get comfortable with it? How can you make decisions or build governance structures that enable managers to move fast, but without putting at risk the brand or the company or the employees, etc. And so balancing that, let's go quickly, with also having some security and basis for what we're doing so that we don't make a mistake that is irretrievable or causes risks that are unnecessary. So part of it starts with the board.
Yeah, let me hone in on the board because Jason and I spent a lot of time on the board and corporate structure.
Right.
I have a hypothesis that the current corporate form is just not amenable to AI. It's very deterministic. There's barely been any innovation in corporate form since post-World War II, when you had manufacturing of widgets basically that you could scale.
Sure.
And then what I really wonder is how can we give the board members themselves a better incentive to govern more strongly when something disruptive like AI comes along? And then how could they themselves use AI? This is one of my hopes to better govern their leaders who may be spouting off marketing nonsense to them, and they can now easily check, right? In a quarterly update or an earnings call, whatever, right? What are your thoughts there? Because I really don't see any innovation in corporate form. Maybe you are.
There is some. There definitely could be a lot more. And a lot of it comes back to questioning, what is the role of the central company and how do we support the portfolio companies we've invested in, or begin to look more from, I wouldn't call it necessarily a venture capital approach, but understanding, we are the guardians of a portfolio, and how do we best use that portfolio to create improved outcomes,
Right.
and looking at where there are synergies and where there are not, and what we want to hold on to and what we should sell, and moving in that direction. And I think we'll see more of that, and that's kind of the leading edge. And the most successful boards are really looking at what they can do with technology to have better outcomes. So better decisions, faster outcomes, and a knowledge system that goes and says, this is what we're seeing. So yes, it is coming, but it's not as fast as it could be. And of course, again, we have some companies, some organizations that are jumping way ahead on this, and others that are not. And that will be disruptive, so that the ones that are moving fast have a significant advantage over those that are waiting and seeing.
Maybe we'll move on to education. I know you spend a lot of time in executive MBAs, training programs. I think you mentioned right before we started, you're going to Oxford in a few weeks to run a program, or maybe it wasn't a few weeks. You can tell us, let us know.
Yeah.
And the great question I have is, education has barely innovated as well since the Prussians, right? So for the last 200, 300 years, education is basically still the same as it was. And how do you fit AI into the picture? And not just AI. There's always waves of disruption coming. And I feel like we're stuck in this Taylorism still.
Yeah.
But maybe I'm wrong. You're closer to the battle than I am.
Yeah, no, I'm off to Oxford this weekend for the Oxford Venture Builder, and there are a number of schools I work with, also IMD in Lausanne. We have a program coming up in May, Venture Capital Asset Management, which is really popular with professional executives and asset managers and family offices, which is a lot of fun and very challenging. Look, technology is continuing to change, but the basis of education needs to come back to critical thinking, questioning skills, understanding why I'm asking a question and how to listen for the answer, And then all these technologies just amplify my performance. So I can bring in computers, I can bring in LLMs, I can bring in quantum. There's so many things I can do, but it's because I understand what questions I'm asking, and I understand and I can really hear the answers I'm giving and filter them for bias and use my judgment. So where I see education, where I see a bright light, is emphasizing how can people become better critical thinkers? How can they become aware of their own blind spots? How can they become more effective leaders because they know what questions to ask and how to interpret those answers, as opposed to rote learning, memorization, tell me what's on the exam, all the things that AI or other technologies as well just completely eliminate. So this squeeze we have on the middle manager partly is because a lot of what the middle manager was doing was checking, right? I check to see if the salesperson's numbers are what they're supposed to be. And of course, now I have this technology that says, well, I can do that with much higher accuracy in real time. So there's this shift, and a lot of the education system hasn't kept up with this because they're still on the let me tell you what you need to know, and then I'm going to give you an exam where you'll write the answer, and if the two are the same, you get a good mark. So we need to move away from that, and if we don't move fast enough, I mean, what you already see happening is people are questioning what's the value of a degree. Or I read a thing this week in the Washington Post. There are these online schools where you can go as fast as you want through your degree, and people are binge watching them like Netflix and getting their degree in 3 weeks. So they just stay up and do 3 weeks, 24 hours a day of school, and they get all the exams right, and they have a degree. And then now where this is wrong is they say, oh, well, this is weakening the value of the degree. So, well, the problem is not the value of the degree. The problem is you're not giving people the skills they need so that they could be successful. So that's where I see the big shift in education coming, moving a lot more towards simulations, towards practice, towards learning by doing, as opposed to here's what my PowerPoint slides say. Now let's see if you can remember it when I give you this piece of paper to write it back on.
And it's actually maybe a return to, at least in America, the United States, the early part was just apprenticeships.
Yeah.
That's kind of gotten lost. Like people just learn professions by doing it. And one of the criticisms, you mentioned it, of modern education, and it may be even a selection problem that we're creating, not producing the right kind of talent for the environment we're in. In education, there's always an answer. There's always a test. It's a well-defined box, and the professor or the teacher just happens to know the answer. You get out into the real world, right? And it's not if you do X, you get Y. You don't even know what X is. Is it even an X? If I do what? If I do X, do I even get a Y? Maybe it's Z or A or B or C. And we don't train people very well for this stochastic, random, arbitrary world that you end up going into when you go into business. And I think that's one of the things. And when you go into corporate, sometimes it doesn't stop. You have deterministic tasks. You rise up the ranks, and you never learn to deal with what VCs learn to deal with. This is just absolute uncertainty. On the other hand, one of the points you raised was, and correctly, I think, corporates can't be VCs. VCs can exit. You can't exit the corporate, right? Like it's just, it is what it is. And your duty as the board is to take care of the corporate, maybe exit a business, but you can't exit the whole thing, right? That's your duty.
Right.
So I'm wondering how we get people, and maybe you don't know the answer and I don't know the answer, certainly, to think more probabilistically in terms of hypotheses and testing and experimenting. That's just not the way we're raised, even though we learn the scientific method very early. We just don't apply it afterward.
No, we don't apply it. And the idea that there is always that right answer,
Correct.
which is part of a lot of the problem with the case study. And I've used case studies for decades. But if the case study comes down to here is the right answer and the other answers are wrong, then we're training managers to think in terms of there should be a right answer. And I think that actually we don't need managers in this world right now. We need leaders that can take decisions based on the latest information available, and then can adapt and adopt based on new information. So that's one thing. If you look at, we were talking a little bit about automotive, and if I've been lucky to meet a lot of these automotive guys in China, the BYD, the NIO, the Xiaomi. And at first, everyone said they were crazy because they were pivoting constantly, right? Like that's all they were doing is pivoting. And people said, these guys, they don't understand anything about automotive and how the industry works. What they were missing, though, is they didn't want to understand how the automotive industry worked. They wanted to understand what the customer was missing. And when they could hit that, then they could scale and get to this point where, okay, now we build the factory that can do 200,000 cars a week or whatever it is. But we're not going to do that until we understand really that unmet need. So I think the corporate world can still learn a lot from the VC world on experimentation, and
Customer
that it's
discovery.
okay to make mistakes, right? There's so much in corporate that's like, I didn't make a mistake. And so that you spend a lot of time building the rationale where there's 0% chance of error. And the issue with that, of course, is you miss the market. Because while you're building this case, the market is moving. And by the time you're ready to go to market, you're 2 years behind where everybody else is. So you're just not going to be able to compete.
A quick rant on that. I think I'm with you on the case studies. In knowing how they're written, there's a hell of a lot of survivorship bias in there. Just because a company was successful doesn't mean that the decisions they made were the right ones. That's the thing. There's luck. There's serendipity. There was a probability standing there that they could have gotten it wrong. And it doesn't mean that if you're a company if you're not exactly like that company is, with the same business model and strategy, what can you actually learn from it? It's like people who look at Michael Jordan, they read a book on Michael Jordan's practice habits.
Sure.
Will you ever become Michael Jordan if you don't have the same capabilities? Maybe you learn a little bit. So that's my point, is like this tendency to benchmark and learn from cases. You may be learning completely the wrong lessons that you don't apply to your situation. And I think that's kind of what happened in automotive is there's a lot of survivorship bias. We know how a business looks in automotive. You don't look like that. You don't have any idea what you're doing. I've been in this industry 25 years. What the hell are you doing? You're clueless.
Yeah.
Step by step, they're doing this updating that you're talking about. They're testing with a new generation of customers, validating new markets, new business models, and then the next moment, they're eating your lunch.
Right. Well, the closing remark I'd have on that is, especially today with movements in technologies and fast changing geopolitical situations, agility and speed are significant advantages that any company can have. And so if you're able to move quickly and you can reallocate resources and you're not locked into very expensive decisions that cannot be exited, you have a significant advantage over those that do, because they just won't be able to move at the speed necessary to hit where the market is going.
But going is the key word. Direction is the most important thing, right? Because if you run fast in the wrong damn direction, that's the slowest thing you can do, right? So
of course,
agility, I think people mistranslate it. I think it already implies that it's a horizontal, right? I'm scanning quickly, and this is what the Chinese are good at. They're scanning quickly, and as soon as they find that lane, then they go. Yeah, and so it's maybe a velocity is the right word, right? It's the combination of the direction and the speed, right? All right, good. Yeah. Jason, what else we got?
We're kind of coming up on an hour, 45 minutes here, so I wanted to kind of end with something fun, I hope. You were once awarded the Chairman's Circle of Excellence Award for quality at your rental car location in the early days of your career. What are the factors that put your rental car location head and shoulders above the others?
Besides you.
You really dug in the FBI materials there.
Yeah.
Look, those were the days when TQM was a really big thing. And so the organization I was working with,
what is TQM for people who don't know what that is?
Yeah. Sorry, I'm going back in time. Total Quality Management.
Yeah.
And there was an award in the United States called the Malcolm Baldrige Award. And this award was given to companies that embrace this quality initiative.
Right.
And it all started with In Search of Excellence. So you remember that book came out, and the American management consultants went to Japan and they said, why are the Japanese beating the Americans so badly? And they came back and they said, because the Japanese understand quality and we don't.
And
And so there
Kaizen
was
and
this
Lean starts to come.
Lean came later, and Six Sigma. So we embraced this right away at all of the 10 locations I was running. And we were able to roll it out. And what happened? Well, our market share went up, our profitability went up. We were getting customer repeat that was outside the normal. And so that's how we actually ended up winning this award. But I mean, it wasn't just me. We had a team of over 150 people that were working on this. I just happened to be leading the team. But it was really saying, okay, what if we use data to drive quality and then learn from that to design better processes? So really looking at all the friction points for your customer and removing them, and all the friction points for the employees that have to serve the customer. Because a lot of times, and this is still true in business, the employee knows the right thing to do. Just the systems that are put in place will not allow them to do that. And so
Right.
then they look for workarounds. And, I see this all the time when I'm flying. There'll be someone, it's usually someone who's been at United or Lufthansa or whatever for 30 years, and they know some secret backdoor way to do something that goes around the system. And everyone's like, oh, so good you're here. But it's like, why is the system forcing people to take poor decisions, when everyone knows what we actually want to do is just get this customer on their way to wherever it is they need to go. And we're not going to save any money by holding them in the lounge for another 9 hours. So
Yeah.
it's all coming back to that same idea of what do we do to remove friction for our employees and customers.
And I think just to wrap up our entire conversation, the thing we've been circling around, because I've known you for a while now, and one of the key traits that you have, and I think this is the trait that leaders will have to have, is intellectual humility. And the whole conversation's really just been circling around learn, be
Right.
open to learning, be humble that the way you currently do things may not last forever, right? And
Yeah.
maybe it will, but at least have the courage to ask and go look into the environment. And for me, that's the great hope where AI can help you. You mentioned that very early. Test your
Right.
theories in private with this chatbot. Make sure the
Right.
chatbot's not lying to you, right?
Yeah.
That you don't have confirmation bias. But I think that's the key thing. And it's probably what's driven your career so far to where you're so successful is just this willingness to learn, willingness to be wrong, because they're the same thing in the end.
Right.
You gotta be wrong to learn something, right? And I think that's the key to strategy is not bravado and confidence. It's just the having the humility to learn in an uncertain world.
Well said. And I just close. I mean, one of the first coaches I ever worked with, they were really clear. The first time I met them, they said, listen, what got you here won't get you there.
Yeah.
Right, that's it. Like you can make it as complicated or fancy as you want, but you've arrived here because you did certain things. And this can be you as a person or you as a company or you as a conglomerate. Made us arrive here will not be what gets us to that next level. And so how are we going to make that jump? And what has to change for that to be true?
Very good.
Yep. Scott, appreciate you. Thank you for being our very first
Thanks.
guest on the Show Your Priors podcast. We would love to have you back on someday and recount our progress. I appreciate you.
Thanks.
We hope you enjoyed that interview. I like talking to Scott a lot because he helps you think through the current environment we're all living through as we speak. And it is not easy for corporates and new companies to deal with this environment. There's literally a new headline advertising something explosive, something revolutionary every day. There are billions going here, billions going there, partnerships forming, new product releases. At the same time, the adoption in corporate's very slow. But I think the main thing that I took from the headlines in this is AI is coming, billions are being deployed, Pandora is out of the box. The through line is there's a race for compute power. There's a race to be the right partnerships with the right channels to the right customers. And at the same time, How will corporates deal with that? Are the small experiments enough? Or do they need to do something much more transformational?
Hard to say. All right. Thank you for joining us on Show Your Priors. We appreciate you being here. Leave us a comment down below. Let us know what you liked, or if there's something you want us to talk about in the future. We'd love to hear from you. Give us a subscribe. Tell a friend about us. Tell your mom, your dad. You can find us every Tuesday right here. We'll see you next week.
Mama, I think I made it. I'm kinda like Tulsa famous. I'm hanging out with Gary. Now they know what my name is. Feeling like Sir Mike, it's money in my name.